This is Professor MoneyPigTrading. Today is September 18, 2021. We're going to talk about US shipping stock intro. What are the ticker name like DAC, GSL, INSW, SBLK, and ZIM? And what are the differences between container, dry bulk, and tankers? So really quick, if you haven't liked this video, make sure to like it. That'll help our channel tremendously. And so make other people who are looking for this content, help them to find this content. And if you're interested in our Discord community, which has a really great track record, and you will see them at the end of the video, feel free to check out www.moneypigtrading.com. Also, we're on Twitter, YouTube, Instagram, or MoneyPigTrading. And really quick disclaimer, we currently are holding ZIM stocks and long call options. And also, we're not registered financial advisors, so please invest at your own risks. And when you're looking at the shipping industry, basically there are four different types of shipping companies. The first one is container shipping, and which has been very popular lately because their stock price is like parabolic up in the past 1 year. When you're looking at them, there are actually two subcategories. One we call it charter. Basically, they rent ships to those carriers. And the charter names that we're looking at like Global Shipping Lease, GSL, and the Nanos, DAC. And carrier names like we're focusing on ZIM, ZIM, and also there's a penny stock CICOF based in China. That one, the stock price is doing pretty well as well. The other one is dry bulk. The symbolic one is SB and SBLK. And also there are tankers. And tankers, basically you have two different types, dirty tanker and clean tanker, which ship crude oil and gasoline correspondingly. Actually, for tanker name, we're looking at INSW. The other one we're looking at is natural gas. So basically, natural gas, they bring like LNG, LPG, etc. So there's a pretty quick high level of several different type of shipping companies, and they actually have very, very different business models, and we're going to look at them in the next few slides. The first one is charter. The represented one in the US stock market is DAC and GSL. They basically own actual ships. And so they are very asset heavy, and they're more like running a financial firm because they actually spend a lot of money and have mortgage on those firms, on those ships, and rent it to those container shipping companies. And they should sign 3 to 5 years of lease with those shipping firms. So they're relatively stable because those are like 3 to 5 years of lease that will generate a good income, minus the costs, depreciation and the interest mortgage rates. And they're basically a money printing machine right now because as long as their shipping clients don't bankrupt, and because of elevated shipping ship rental costs, they're just continuing to bring so much cash flow and revenues. And basically their business model is to get revenues. They are making money by shipping rental price multiplied by the number of shipping lease. And basically right now the shippings are high demand. Everybody has no ship. So their utilization rate is like nearly 99, 100%. So their leasing number is pretty high. And the shipping rental price we're going to see in the next slide is a HARPEX index. So basically this index from the Harper Peterson company, I will tell you how much is the price to rent a container ship. And you can look at the price on September 17, it just make all-time high again. And basically every week that price just continue to go up because of several macroeconomic and supply-demand reasons. And basically looking at this number, you can tell DAC and GSL are making very decent money right now because their shipping rental prices continue to go up. And then basically what happened is we don't have enough ship at the beginning. Now we don't have enough metal box container. And also the COVID in China is overshoot. Once they have like one COVID number, they shut down the whole the port. And also they make the inspection very, very seriously. So everything that's been loaded in the China ports pretty slowly right now. And once there's a COVID outbreak, the whole port is shut down for like a week or two. On the US side, the problem is we don't have proper infrastructure. So you will see the news continue to come out like outside Los Angeles or Oakland port. There's just like record number of ships, cargo ships waiting there to load their cargoes. So that's why the whole shipping logistic is like so congested. It's actually hurting a lot of companies right now. Like if you look at some specialty chemical companies, they have been lowered their guidance because they said they are being impacted by the shipping costs. The other type of shipping companies here are container shipping, and we're looking at ZIM, which we also mentioned in the previous video. The link is on the upper right corner, and the CICOF. So this type of company has a really broad range of spectrum. So ZIM is another extreme. They symbolically only own one ship, and so they're very asset light. And what they do is they rent 99% of their shipping capacity from those charter companies. However, CICOF in comparison actually owned a couple more ships. So they're like kind of medium assets, not like completely relying on charter. And also, those type of company, they sign 3 to 5 years leases with charters. And because the shipping cargo freight rate continue to go up, and their shipping rental costs is relatively low because they secured the contract 3 to 5 years ago, and that's why they're printing a lot of money. So basically, a revenue business model is the shipping costs minus the rental price, which we mentioned in the previous slides, multiplied by the shipping demands. And we mentioned the demands are really high right now, and the rental price is higher, but the shipping costs actually increase even faster than the shipping rate. So that's why companies like ZIM are making so much money, and their stock prices go up like crazy, right? They won the IPO $10 in January this year, and now trade at $60, and that's like 6 times, which is amazing. And basically, if you want to look at the cargo shipping cost, you have to look at Shanghai Containerized Freight Index. And basically now when we talk about it, it's just making all-time high again. And you can see this freight index is actually goes up quicker than the rental cost. So that's why companies like ZIM, especially they secure a lot of 3 to 5 year long-term lease. Now they're just like printing money, and that's why they have so much cash flow, and they can distribute massive net income revenues to a special dividend next year, which could be like $13, $15 a share. Consider the current $60 per share, the next year dividend could still be a massive 25%. So that's why this company are making so much money and capture a lot more attention these days. That's the reason. And of course, ZIM, this type of company is more risky down the road, especially after 2023, Q4 2022, because we just don't know how this containerized freight index will go, and maybe the shipping costs will continue to be elevated. Then the ZIM will have more risk in 2023. But now we know, basically on the fundamental side, the containerized freight index will continue to go higher at least into Q1, Q2 next year. Especially on the US side, the infrastructure on the port is so lacking, like it won't get improved. So this price will continue to go up and helping companies like ZIM making a ton of money, at least until Q4 next year. But after Q4 next year, ZIM can be a more risky portfolio for you to focus on. However, companies like GSL, DAC can still be a pretty long-term bet and will be relatively secure. The other category we should look at is dry bulk. Basically, they just ship commodities like coals and iron ore. So when you see those ships, they don't really have the cargoes, where cargo usually put a higher finished consumer electronics or finished product with a higher financial values. Well, commodity or dry bulk, they're usually lower value and just put it in the ship. And when you look at the shipping costs on this sector, you have to look at the Baltic Dry Index. And this index is actually heavily affected by trade tension, like China-Australia tension. Then there might be more commodities being shipped between these two countries, then that can affect the dry bulk index. And also we have to look at the China export and import. Let's look at the chart. So this is a daily chart of the bulk dry index. When China started to say at the end of August, they're going to reduce the iron ore import, then the Baltic Dry Index had a pullback. And now quickly push back up because the demand worldwide is so hot because of the post-pandemic. So the decreased demand is quickly absorbed by many different regions in the world. So that's why Baltic Dry Indexes continue to push back up to the regional high. And if you look at this weekly chart on the Baltic Dry Index, you'll see back to 2008, when the world economy was so hot, the commodity shipping was so in demand, the Baltic Dry Index was actually about 3 times from the current price. And just on the Friday, September 17, the market closed, boat drag shipping companies are actually saying that the boat drag index is going to go parabolic. So definitely keep an eye on it. We do think there are more room going up from here, especially now post-pandemic. The Delta wave is probably dropping at least right now in the US, but hopefully soon in the worldwide. Then we can see the world economy open back up. Then this Baltic dry index can shoot back up and hopefully help those dry bulk companies. The last sector we're going to look at is tanker. So this is how tanker look like, and basically they just ship crude oil right now. And a lot of their, when you look at them, you basically have to look at this Baltic dirty tanker if you're looking at the Baltic tanker names. And you can see the price on the left side is a weekly chart. After the pandemic, the price still not very good compared to the pandemic, before the pandemic. And you can see the price actually has a seasonal pattern. Usually at the winter is higher. Looking at the daily chart on the right side, you can see since pandemic, the price is pretty much lingering around $600 to $800. And one reason is because a lot of this tankers, what they ship is like crude oil for like airline travels, and since the airline travel is right now still pretty low, so that's why those tankers are getting hit pretty hard. But when the reopening comes, the airline travel demand comes back, more flights fly in the air, then we can see those tanker industry start to boom again. And yeah, just looking at one of the tanker name INSW is the daily chart. You can see since COVID actually pushed back up to 30 at the beginning, and then quickly pushed back down to the all-time low, 11.32, and now just lingering around $14 to $16. But when COVID started to improve, and yeah, we probably will see the INSW stock price start to pick up from there. So really quick, we actually have a really decent option-based swing trading program. One member joined after 1 month. His account was able to grow from $2,000 to $12,000. It's 540% of increase. We also have a really decent long-term investment program, 54 trades so far this year in 2021. Average return per trade is 21% with 75% winning rate. So yeah, if you are interested in our paid Discord community, feel free to check out on www.moneypigtrading.com. And again, don't forget to follow us on Twitter, YouTube, Instagram, MoneyPigTrading. Thank you for watching. I'll see you guys in the next video. Bye-bye.